You may have seen some recent headlines about the market shifting in favor of buyers, but there's more to the story. We'll address this later. But first, this is the Las Vegas guard gated real estate market update for January 2026.
At the end of January, 442 homes were actively listed, up 22 from December. We typically see an uptick in inventory as the spring selling season kicks off. Year-over-year inventory was also up by 54 homes. On the demand side, 96 homes were under contract at the end of the month, 22 more than December and 8 more than a year ago. Assuming these transactions close, the market is positioned for a strong start to spring. Closed sales totaled 70 homes last month, down slightly from December, but up by 17 homes year over year. Finally, 42 listings expired in January, up from 25 in December.
Now, let's break things down by price point using our months of supply chart. Months of supply, also known as the absorption rate, is one of the most reliable measures of market balance. Rather than simply counting how many homes are listed, it tells us how long the current inventory would last at today's pace of sales, expressed in months. Historically, about 6 to 7 months of supply signals a balanced market. Right now, half of the price ranges that we track fall into that category. When supply drops below 6 months, conditions shift in favor of sellers as competition tightens. By this measure, homes priced between 1 and 1.5 million are in sellers' market territory. While headlines say the market is shifting in favor of buyers, those articles reference the market as a whole, thousands of properties with a median price of $470,000, which is below our threshold for reporting on the guard-gated market. However, there is a segment we cover that is favoring buyers. Above 3 million, we're seeing double-digit months of supply, well above the 7-month mark where the advantage swings to the buyers. Sellers in this range will continue to face increased competition. And one other thing worth noting, cash buyers accounted for 56% of January's purchases, the same as December.
Next, let's talk about days on market. There are two ways to look at this data: total days on market and days on market from the last price. For example, a home is listed at $1.8 million. 120 days later, the price is reduced to $1.6 million. 20 days later, the home is sold. In this case, we would say the property had 140 total days on market, but only 20 days on market from the last price. The second metric matters most. It tells us how long a home takes to sell once it's priced correctly. In January, 54% of homes sold within 30 days of their last price. A total of 91% sold within 90 days, which is consistent with historical norms. Only 9% of sales, 6 homes, took longer than 90 days. So, does waiting beyond 90 days ever pay off? In most cases, no. As we critique these sales, keep in mind that we don't know the full details of these transactions, whether stronger offers were missed, showings were limited, or other factors were at play. These first two properties are condos in the Summit Club, which is a very thinly traded market where longer timelines are expected. Regardless, both of them took sizable discounts. This ultra-luxury penthouse sold for $4,260 per square foot. The other condo sold for $3,696 per square foot and sat on the market even longer. This home in McDonald Highlands is on the higher end of the market. They might have still made money, but they were clobbered by an 18.5% discount. Now let's move on to the sales that took longer than 90 days but still had good results. After 130 days on market from the last price, this home in Spanish Trail sold at a 5.1% discount off the last price. It seems like they did all right. These next two homes sold without discounts, but with some caveats. This sale in the Ridges included approximately $150,000 in furniture. And this one in Southern Highlands also included furniture and favorable terms for the buyer. So, 3 out of 70 homes exceeded the 90-day timeline by 2 to 7 months. While still managing to sell, 2 lost their furniture and the other took a 5.1% discount. So even these outliers didn't walk away unscathed, depending on how much they liked their furniture. Remember, these are exceptions to the rule. While it's easy to point to the price as the final lever that solves all problems, a property's condition can be improved to help justify its price, and good marketing does matter. Once a home is positioned correctly, the market responds quickly.
Homes that were priced strategically had strong results last month. A lot of sellers assume they need to build in plenty of negotiating room, but January showed that isn't always the case. In fact, These 8 homes were priced to motivate strong offers right out of the gate. 4 of them sold above their original price, and another 4 sold right at the original price. We also saw strong results from sellers who adjusted their price along the way. 6 homes had price reductions and then sold at the new asking price. In addition to the 14 sales we just talked about, let's look at the 56 sales where some negotiation did happen. 39% sold between 0.1 and 5% below asking. 22% sold between 5.1 and 10% below asking. And 18% sold at discounts greater than 10%.
Overall, January reinforced a pattern we've been seeing. The guard-gated market is not moving in lockstep with broader headlines. About half of the price ranges we track are sitting in balanced territory. Homes between 1 and 1.5 million remain in a seller's market, and above 3 million, buyers have more leverage as inventory builds and competition increases. Days on market data continues to tell a very clear story. Once a home is priced correctly, the market responds quickly. More than half of January's sales happened within 30 days of the last price, and more than 90% within 90 days. Extended timelines were almost always tied to pricing, not patience. We also saw that sellers who positioned their homes strategically were rewarded. 4 homes sold above their original price, 4 sold at their original price, and several others had great results after a price adjustment, proving that accurate pricing creates momentum, while overpricing often leads to unnecessary negotiation and larger discounts later. So while inventory is rising seasonally and expired listings jump month over month, the year-over-year context and absorption rates show a market that is behaving very normally for this time of year, just with very different dynamics depending on price point. If you're considering selling, understanding exactly where your home fits within these price segments is critical. And if you're buying, knowing where leverage exists can make a meaningful difference in how you approach an offer. For a straightforward assessment of your specific situation, call us at 702-605-7482 or visit robjensen.com.